Well, nervous times on the markets at the moment. Earlier I spoke to Charlie Aitken from Southern Cross Equities. Well, Charlie Aitken, our first night on air, but how did January play out on the market?
Well, Tiki, yeah, Happy New Year to you and your viewers, but it seems without late line business, the market was a bit directionless in January. We've only managed to put on 9 points, which is a very lacklustre effort considering the strength in global markets. So not a great start to the year from Australian equities, but there have been a variety of reasons for that.
All right, to today's session, and my producer calls it pyramid selling, but to what extent did the Egypt crisis actually have any impact here in the markets?
Well, interestingly, I thought the Australian equity market put on a pretty mature effort today, looking through the Egypt political issues and going, really, does that have really much effect on Australia? And the answer is no. And you can see the market rallied pretty much from the open today. We opened down about 60 points, fell down, closed down about 20 points, and really the market just not really feeling Egypt's much of an issue for Australia in the medium term, remembering that Egypt GDP is less than Queensland's.
Well, further north to Britain, and British media have investors losing patience with both BHP Billiton and Rio Tinto and the whole idea of mega mergers. They want to see returns on capital to shareholders once more. Is there much chatter about this in Australia?
Yeah, there's a growing push towards a greater amount of capital management from BHP and Rio, both in the form of dividends and buybacks. Look, the simple point is that these commodity prices we see today, both BHP and Rio, are printing more cash than they can spend, either on mergers or capex. So I think this will start getting an audience. I think you will see dividend surprise and some capital management surprise from BHP and Rio this month as they report, and I think it's a fair enough thing. I think that both companies should be returning more capital to their shareholders.
And the takeover of the Crane Group has the blessing of its directors, I see, following a revised offer from Fletcher Building.
Yeah, I see that Fletcher Building edged up their offer, and the Crane directors, in light of having no better offer, accepted. I think that's fair enough. It's a 30% premium to what Crane Group shares were trading pre the offer from Fletcher Building. Fletcher Building has a pretty good track record of buying businesses and growing their business via acquisition. The merger makes some sense, I think, and you may be somewhere near the bottom of the housing cycle. But I think one thing this year, Tiki, you're going to see a lot more mergers, a lot more companies buying to grow, deploying their balance sheets, and maybe this is just the start of it.
There's another one of your bold forecasts, Charlie. Thank you very much. It's great to have you on board.
Thank you, Tiki.